Hello and welcome everyone. Steve here with TradeForexForProfit.com. Today is Tuesday, February 18th, 2021, and we are looking at the Aussie US dollar on the 4-hour time frame. This is a trade that I took yesterday morning, Wednesday, and it's starting to pull back, retest the original area. So I want to talk about this. I've been trying to start these videos a day or two into the trade, just so you guys can see what tends to happen on these pullbacks. And when the market's pulling back into your entry level and nearing your stop loss, it's really hard. It's an extremely mental challenge to not exit the trade and just take a little loss or take a little profit. You have to maintain the course. You set the trade up initially and then you just go with it. You're going to take it 2 times profit, or you're going to take your stop loss, which is 1 position. Okay, so win 2, lose 1. That's how this works. If you maintain that risk reward ratio, you're going to be successful in this business with these patterns. All right, as we see this consolidation range right here, the market pushes off of this support level. All right, this creates a zone. All right, the zone is going to be where the market breaks this little candle and the low. Okay, so I'm going to mark that area. This is the outer zone. So when we return to this level, the market might represent overextension. There is a zone of consolidation. A lot of things going for us here. So what happens is we move down into this area. There's a nice bounce. This market is appears to be taken off right here after this little bounce in the zone, right? We get this little white candle, another big white candle is forming. Everybody's buying into this. The market then pushes back below, takes their stop. There's the engulf deep into the outer zone, which is right here. The outer band is touched, and off we go to the upside. Now, here's why I started waiting a day or so to get to begin recording some of these trades, because I want to show you guys and drive home this fact that we have, in fact, 1, 2, maybe not quite touching it here, but 3 candles. So that's 16 hours. 16 hours later, you could still take this trade at the original entry. Okay, before it moved away, and we'll no longer take this trade. If you're going to take this trade now with the market pulling back like this, you're going to have to drop down to a lower time frame and find another trade on a lower time frame. Maybe on the 1 hour, you're going to find that this is in fact another setup. Okay, so the point being, you don't have to sit in front of these charts every single candle. You can get in on pullbacks, second, third, fourth chance pullbacks. Okay, and as you can see right now, we're moving back into this zone. Okay, we touch the zone and it's immediately rejected. All right, so I expect to see the push come from this area, from this consolidation zone, back to the upside and right through, or at least touching our 2 times profit. Okay, welcome back everyone. It's now Friday, February 19th. We have taken our 2 times profit as the market pushed right through this resistance level as expected, and now we've formed a new pattern and signal right here. We're breaking through this area. We've checked the breakout area with this candle to see if we're going to see a reversal, and the market rejects it quickly. Got in on a pullback. This is going to be a T1 trade again, based on the parameters that we have set forth. Okay, let me back up and talk about this target 1 and target 2 scenario that we use here. As we push through this area here, this becomes a level of overhead resistance. Notice on the first run back to it, it's immediately rejected. On the second run, it's immediately rejected. On the third run, it stalls out right there, pushes way back into this zone. This zone gets rejected. At this juncture, this is when I told you that we're probably going to see it push off to the upside rather strongly. But look what happened first. This little candle right here, okay, gets back to this overhead level and fades. Okay, and then we push back a little more right here, and off we go to the upside. All right, so that was expected based on the criteria of this pattern and the signal and where it lies on the chart. Okay, so with this signal, I expect T1. Okay, so again, we teach you that in the members area. It's relatively a simple concept to understand, but I just wanted to point that out for you guys. we are now in another buy position, and I get asked a lot, why do I not just trail my stop? Okay, well, I have a lot of reasons for that, but if you're going to do it, and I've also talked to people that want to set up two positions, two trades basically. They want to have two units, if you will. Okay, and if you have two units and you take one off of the table at +2, and then the other one, you trail it, maybe you get a little more out of it, that's great. You got a little more out of that one. But what happens when the next three trades stop you out and you lose two positions on those trades where that takes place? Okay, it begins to skew your risk reward, and I don't ever recommend doing that where you're going to exit one and then trail the other one. But if you're going to exit one, I'm sorry, if you're going to just have one position and try to trail it, what I would recommend is I would wait for that to get a specified distance above your 2 times profit, and at that point have it automatically enter a stop order at the 2 times profit, and then every time that moves, just keep moving it up. Okay, automatically have it set to do this automatically, because you're not going to be able to sit in front of the chart every time one of your trades moves through the 2 times profit target. That's not realistic. So if I was going to structure a trailing stop, and this is what I tell folks that ask me this question, that's how I would do it. I would definitely not set it up to where when the market hits your 2 times profit, the trailing stop goes below a candle that the most recent candle. Okay, because if you do that, you're going to see that a lot of times this 2 times profit is where it reverses, and then you're going to get hit right here, and it's going to be maybe in this case a 1 times profit, and that's going to skew your risk reward. So make sure that if you do this, you set it up to enter the way that I mentioned a moment ago. Okay, so we're now in another buy position off of this overhead resistance level right here that the market just moved directly through as it moved through this level and this level. Okay, so pullback again. Let me just point this out. This was, whoops. Let me when this candle closed, it immediately reversed and set up this black candle that was moving right down. Everybody was trading a reversal off of this. That candle closed, completely rejected this area, and now off we go to the upside, hopefully.